Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, and it's July 16th. Hope you guys are having a great morning so far today. The week is almost over. Wow. It seems to be going by pretty quick this week. We do got quite a few economic data reports to go over today, so let's jump right into it. We'll start off with the weekly jobless claims that we get every week, and that is the initial jobless claims. So last week's report came out at 1.31 million people applying for unemployment for first-time benefits. Forecast was expecting a bigger drop down to 1.24. It did drop a little bit, but barely any, just down to 1.33 basically. So it dropped by about 10,000 people. Now we got also retail sales for the month of June. And May had a pretty big spike at 18.2%. Forecast for June was 5.4% and exceeded that at 7.5%. Now, you shipped out big ticket items like autos. We had a 12.1% back in May. Forecast was 5.3 in June, and it came in at 7.3. So autos weren't the big ticket, weren't the big items here, primarily because we're during the lockdown and pandemic. Where are you really going to go for autos? So you're not going to see autos probably up for a little bit here. Let's move on. Philadelphia Fed Index or Philly Fed Index. This is manufacturing in the Philadelphia region. We had a pretty good numbers here. We had 27.5 back in June. 18.1 is the forecast, and it dipped a little bit, but not as bad as we thought, down to 24.1. So those are pretty strong numbers for manufacturing, which is great to see that go up. We also got NAHB Home Builder Index. This is a index that covers the confidence levels for home builders. So we see a pretty big spike here too. 58 in June, it jumped all the way up to 72. And you've been seeing a lot of good data late regards to home building, where a lot of we've been seeing this migration shift, people leaving the urban areas, going more to suburban areas or maybe more rural areas, and that's where the home builders are actually, they're building properties, and so of course they're feeling a lot more confident about the shift and migration where people are moving. Last but not least, it's a minor report here. Business inventories, it dropped. For a month of May, April it dropped 1.3%, and in May, this thing keeps popping up, and in May it dropped 2.3%. So let's jump over to headline news. Stocks are down this morning. We got earnings reports that came out. We had some mixed earnings reports. China's minor factor as well. China had some. Some consumer data came out in China that was a little disappointing. They were a little concerned about it, primarily because China was the first, to, obviously, to have the lockdowns and everything else from the pandemic. So, and are ahead of the yield curve for U.S. and Europe. So they're kind of watching at China, see how things progress over there with things, and they think that maybe some of this data we saw at the consumer level right now, maybe that might subside like China has. So again, those are some different things. And of course, there's been some tensions talking about banning certain people or companies, different sanctions and stuff. So there's been those tensions rising between the U.S. and China as well. Let's see how this is playing out in the bond market and how mortgage rates are being affected. Mortgage rates are rising back up again. We are currently up about 17 basis points. We did settle the day not too bad yesterday and continued that upwards tonight. Now we're up 17 basis points. So this will translate to better pricing on the rate sheets today. So you should see better pricing on mortgage rates this morning. So that would be good news for those all involved. And then right now we're at kind of that magic level I mentioned, just below 0.61. We're at 6.09, and we're kind of in this level here. So once we get in this level, as you see, sometimes we rise up a little bit, rates kind of worsen. So just be a little cautious, but this is kind of where we are currently at, just under on the yields, just under 0.61. All right, so if you guys are looking to buy or refinance, let's talk. I want to help talk with you guys. These reports I do are not anyone else's views but my own. So not representative to any company I work, but I do work as a loan officer, and I could certainly talk to you a little bit about mortgages and what we can do to help you guys out with your situations, whether if you're looking just to rate term refinance or a cash out refinance, or if you're looking to buy, if you're a real estate investor looking to buy your first property, different things like that. We could strategize. Or first time home buyer, worked with a lot of different people, and some of the things I've seems to be kind of a big thing lately is I've been talking to a lot of the older people. Um, seniors who are retired are having a harder time qualifying, and I've been able to get them to help them to get qualified and take advantage of the lower rates and even purchase another property and stuff. So again, I'll leave my contact information in the description of this video, and I'd love to hear from you guys. You guys have a great rest of your day. Thanks so much for watching, and we'll see you in tomorrow's video. Bye-bye.